This is Lewis with Marshman Accounting here again with another accounting instructional educational video for your benefit for free. You can always check us out at www.marshmanaccounting.com to learn from our editorial and blogs, all the different tax updates to the law, changes to the business climate and environment in the United States, and macroeconomically how you can make some wins. Today we're going to be going over a balance sheet, and we're going to be doing it in Excel. Okay, we went over a profit and loss in a prior video, which we posted soon. Profit and loss says we have this much revenue at the top, we have cost of goods sold and expenses in the middle, and we have net income at the bottom, which is the result of the two. So that simple equation is revenue minus cost of goods sold minus expenses equals net income. Very similar here on the balance sheet. What we have is assets, and we got current assets and fixed assets. Current assets meaning assets that last a year or less, and assets that last more than a year. And current liabilities and long-term liabilities, same idea. Liabilities that are current are ones you have to pay back within a year or less time, and liabilities that are long-term, you've got more than a year to pay them. So maybe a 5, 15, 10, 20, 30-year note, mortgage, think of a mortgage. And then owner's equity is going to be the result of the equation, the accounting equation it's called, which is assets minus liabilities equals owner's equity. Equity means what you own. So what the balance sheet is doing is testing. What do you own? Basically, what do you think you own? What do you owe? Meaning what's going to reduce from what you think you own? And what do you really own, which is a result of those two mathematically subtracting one from another. So let's say our current assets at XYZ company, and let's name this company. We'll call this one, what kind of company we're working with today. Today we're working with a machining factory. So we're going to say 1, 2, 3. They're an S corporation. I'm going to say as of 12/31/2021. Okay, so here's our sweet balance sheet. So we've got current assets of $112,088. We got fixed assets of $504,785. Other miscellaneous assets like goodwill and intangibles, which we can get into in another more detailed description later, of like 11,025. Current liability of 20,580. Long-term liability 120,578. And owner's equity from paid in capital and paid out capital distributions of, we'll just say 80,789 for a pretty realistic example. Total liabilities and stockholder equity is just $500, leaving a resulting balance of 0. Over here on that's prior year. So we want to move every one of these data points over to current year, so we can get fresh and in tune with our example up here, 12/31/2021. We're pretending that we're already in December of this year, and that this company, 123 Machine Shops Incorporated, has had to prepare a balance sheet. So what I'm doing is I'm just hovering over the cell edge until a little 4-pointed triangle appears, and I'm just clicking left, clicking, dragging over. Okay, and that's going to give me all this information exactly what I want. Now, say I didn't want prior year at all. Say I just want to get rid of all this junk here. I'm going to select it all with the left click, holding it down and scrolling over it. And then while it's selected from doing that, I'm going to right click. I'm going to say delete. It's going to ask me if I want to shift the cells left. And I'm going to say yes or okay. And now it's going to tell me I can't do that because the cells are merged. So I'll select them again by holding the left click and scrolling over all of them. And I'm going to go up here at the top, merge center. So something is merged. I got the text. I just gotta see. Just get rid of the whole column. You can select the column too. Go up here and just click C with your left click. Say delete. All right, that whole bad boy is gone. Awesome. Now we can kind of stretch this one out a little bit. We'll make it formatted for print. So we're going to go to the print screen, pretending we're printing, and we're going to say print portrait orientation, and switch it to landscape orientation. So you see it's going to show up nice and big and bold and even here the way we stretched it out before. And so we got our asset types. Now let's get this mathematical formula in line, because as you can see, none of these numbers are going to equal this, and hashtag ref is not a number either. So what do we want to say? We want to say current assets. These. Say these. plus this, acceptance say plus this, acceptance say plus, equals 627,000. So let's take the fill and know total assets was going to be. That's where it's going to start. Okay, the total assets is going to, we're going to click on the cell, we're going to say equals current assets plus fixed assets plus other assets, enter. That's total assets. So the sum of 112,088, 504,785, and 11,025 is 627,898. Same deal over here. Then we're going to say, click in the cell, I'm going to say equals, and the total liability and stockholders' equity. So we're going to add in equity and all these liabilities is going to be equals, as we said, then you put current liabilities plus sign, long-term liabilities plus sign, owner's equity plus sign, enter. What's the problem? Let's try one time. Just in case I did something wrong or stupid. Oh, I think I already had a formula in there. That's why it's not equals current liabilities plus long-term liabilities plus owner's equity, enter. So that total liabilities and stockholder equity total is 221,947. Now our balance we're going to take is going to be equals total assets. So click on total assets, then hit your minus sign. You're going to say minus total liabilities and stockholder equity equals your balance or what you got for owner's equity total, which is now going to be $405,951. This is Louis Marchman, owner of Marchman Accounting. You can visit us on the web at www.marchmanaccounting.com. We've got editorials, blogs, videos, and all kinds of educational tools and resources, mortgage calculators and the like. And you can also get to subscribe on our mailing list, which is full of informational business climate, environment, and macroeconomical tax trends and topics for nerdy folks and business folks alike to profit from and gain a value and understanding from and how to run the financials for their business. Again, looking at the financial operations of a company and tracking it is called financial accounting. Taking that data to the next level and using it to make decisions is called management accounting. We're happy to do both, so call us for either. We're reachable at info@marchmanaccounting.com via email or 719-331-7190. You can always find us at www.marchmanaccounting.com. Again, have a great day, everyone, and thanks for stopping by another lesson.